Hello everyone, and welcome to the PivotBoss monthly market outlook for May 2022. Thank you for joining me here today. My name is Frank Ochoa, also known as PivotBoss. I am the author of the book Secrets of a Pivot Boss, and you can find us at pivotboss.com and also at pivotboss.ecofin.com, which is our trading room. Again, thank you for joining me here today. We have a lot to talk about. A big day in the market today, post FOMC statement and rate decision, 50 basis point hike, and then a tremendous rally after Fed Chair Powell took questions and the mention of a 75 basis point cut rate hike likely out of the picture. This gave us a nice rally here over the last couple of hours of the day. You can see it here on the charts on the intraday basis. Crude oil was already up. Let's take a look at RTY down here. But you have the ES, the YM, NQ, RTY, all taking off to the upside. If you didn't get a chance to get the FOMC key levels today here, I will post them in the room and also in the Zoom webinar here. These levels are the FOMC key levels for May 4th, 2022. If you're not familiar with an FOMC key level, it's basically the 1 o'clock open price right when the Fed statement is released and also the rate decision. That 1 o'clock open price Eastern time, or rather Central time, 2 o'clock Eastern time, that price right there becomes a very good magnet and an important price moving forward, not only in the next few days but also in the next weeks, months, and sometimes even years. So it's a tremendous level here that we have as a reference point for today. And so far, the market has taken it bid, at least to start. And when we look at some of these charts here on the higher time frames, again, we're going to see some stock charts that have been beaten down. But we're starting to see a little bit of signs of life, at least from a short-term perspective. So this strength here could roll over the next, in terms of the next 1 to 5 days, could lead to a nice little bounce. Can we maintain those gains from a longer term perspective? That remains to be seen. We still have NFP report out Friday. That's going to be an important number here the market's going to be looking out for. Inflation is still something to continue to watch. Obviously, so many different things here at play. But for the most part, these markets here off to the worst start to a year, whether you're looking at stocks or bonds or anything. These markets have been hit hard. I believe April was the worst month on record since 1939. Again, when you get those big time months like that, it's painful. It's painful to watch that huge collapse here after that strong rally that we saw in March. But we had an idea that could be the case. If you go back and watch the recording last month, basically we were eyeballing these set of days right here and said, hey, that doesn't look very good. It does not look very good. It reminds us of this, and we could be looking at a rotation back to the midpoint of the month, of the previous month. And there it was. We got a quick rotation to the midpoint. It tried to hold, and then this failed new high right there led to a massive break through that midpoint, which opened up the previous month's low price right here, which it took out. So outside month for the most part last month, and a tremendous collapse back within the range. So huge trading range still at play. Again, not the easiest year. Actually, one of the most difficult that we've seen, because we are a full 4 months into the year, and this is again the worst start to a year ever for the most part, whether it's stocks or bonds or whatever you're looking at. Crypto's been crushed from many perspectives. So again, not the easiest, but one of the things that continues to remain consistent is these major market structure levels that have continued to be nice guideposts for us. The 4100 level here rejected very nicely. You have 4400 here as a nice mid pivot, and the upper end of the range is 46. That's a pretty good trading range there, and the reaction we've seen off the lower edge again could lead to a bit of a short-term bounce back up toward 4400. Can we get through 4400 and push back toward 46? Perhaps. But even if we do, again, not expecting this thing to really make a run for it to new highs just yet. Even if we push through 4400, the expectation likely is that we stay within the range until proven otherwise. So we have some upside that could be ahead. We'll be looking at several stocks that could be leadership stocks for us here that are pointing north. Things like Apple, Amazon, NVDA, things of the like. We'll take a look at those charts and what that might mean for the near term here, but really, really good reactions here today. But again, keeping an eye on short term, keeping it more short term here, because right now there's not really lasting strength. These bear market rallies can be tremendous, but sometimes the strongest rallies happen in the bear market. And so, this already is looking very, very bullish. Can we hold on? Can we continue to see more strength up ahead? Perhaps we can. But again, not trying to overshoot the target and thinking we're running off. Instead, we could be moving back toward, the midpoint of the range, 4400. And if we get through that zone, it could open up a continuation toward 46. But first things first, where can we go over the short term here? From a short term perspective, tomorrow, how's it going to look? And best case scenario here for tomorrow is for a likely check mark trend day up. A check mark trend day up would be an early pullback during the morning session, followed by a likely buy the dip opportunity that leads to afternoon strength. So that would be the best case scenario to hold on to these gains and extend the move to the upside. If we see some sort of tremendous reaction of prices above 48 or 43 rather, we could be looking at another failure back within the range. Overall, expecting this strength to kind of lift a bit more. Again, 4400 could be a very good short-term target there, which means if we pull back a little bit, say to 4250 tomorrow, there could be about a 150 point move up ahead over the next 1 to 3 days or 1 to 5 days. As it is today, it was a 156 point day, or 160 rather, and that's 140% of average. So that's a big high range day. We knew today could be a high range day given the compression of the previous session. So we went into today thinking it could be a higher range day once the FOMC came out. Thursdays after the FOMC statement and rate decision tend to be high range days as well. So tomorrow could also be another high range day, and if these things can push through the previous week's high prices, it opens up again some upside on a short-term basis. So right now these markets again hanging in there off of support, but still at risk of further declines if these edges give out. And that's the thing here. You're looking at these long-term support levels, 4100 that have held for a while. This 4000 level, as I routinely mention, has only been traded one time, one day ever traded through that level, and that was on this day right here. It was last April 1st, so over a year ago was the last time we traded 4000. It was only for mere minutes before it pushed through it and never tested it again. So that's a tremendous CLVN on the chart, and again, it's hard not to see that level tested at some point down the road. And that level would also coincide with an S3 on the PivotBoss bands on a year-to-date basis, which would be 3 standard deviations below value, and again would provide an opportunity to fade it back up. So that major level right there is still in play. That could be tested still down the road, but as of right now, moving higher at the moment with the potential to push back up toward 46, maybe even a bit higher toward well, 44 with a shot to hit that 46. So the next 1 to 2 weeks could be higher. One of the things you normally see if you go, let's bring this out to a higher time frame, like a monthly chart. One of the things you notice on a monthly chart is when you get a massive sell-off on a 1 month basis, there tends to be a snapback the next month. Sometimes it's a huge snapback, sometimes it's smaller. You know, you get one major month down here, the next month was up. This was a huge push down, the next month was up. Over here, it's been back and forth. We had a couple months down, snap back here. This was a huge month down, and we're already beginning with a little bit of a snapback up the range. So that midpoint right there, the previous month, is in play. That could be a quick test up ahead. But usually, after a massive month down, again, the worst month here that we've seen since 1939, I think, in the S&P, that little failed new low and a bounce here could lead to a little bit of a turnaround back up the range. So usually when you get that tremendous selling pressure the next month, you tend to see a snapback. Are we done going down for the year? You know, again, there's a lot remains to be seen from that perspective. You still have the previous year's low sitting down here in the 3650 zone. That could be in play. This previous year's midpoint is still trying to hang on. So as soon as that thing fails, you know, it could open up a little bit more downside. So we may not be out of the weeds just yet. And that's why, again, it's important to continue to look towards some of those leadership stocks, stronger stocks, stocks in an uptrend, stocks with dividend and all kinds of different things that can help in this market environment. But right now, very bullish here on this afternoon. We'll see how much more upside we can have from here. But it could be decent on a short-term basis. I'm not going to get overly excited about the potential of this move, but usually when you see an overextended month, the next month tends to be a little bit higher. We also talked about that from a quarterly perspective. If you recall, we looked at the quarterly charts, and one of the things we mentioned, you know, you go back a decade. You get one bad quarter, you tend to bounce. One bad quarter, you tend to bounce. You know, each of these bad quarters is followed up by a bullish quarter. And we're not, you know, we're 1 month into Q2. You see a lower low failure here. Does it finish the quarter bullish? Can it bounce back from there? Usually when you see one quarter down, you tend to bounce back the next quarter, but that's not always the case. There are those times where you know, there's some significant circumstances that continue to push this thing down. For example, the '08 financial crisis, the dot-com bubble bursting led to multiple quarters of weakness. Are we in the same boat here where war, inflation, 40+ year inflation gains, does that lead to more weakness as well? But the tendency, again, one huge bad quarter, you get a snapback. You know, one big huge bad quarter, you get a snapback. Perhaps we're building toward that now. But again, not holding my breath too much on that just yet. Instead, mostly range bound. And right now, off the lower edge of the range, seeing a little bit of a bounce. So tomorrow, perhaps the early pullback is defended, and that could lead to a return back toward the previous month's midpoint. That's going to be the high probability target, and the previous week's high is going to be very important early in the day tomorrow. Looking at things like the NQ, for example, tech has been super weak, very bearish overall. If you look at the charts for all of the various major market indexes, the NQ continues to lag the broader market tremendously, and while the Dow continues to see less of a severe decline than their tech counterparts right now. You can see how close we are to the previous year's low here in the NQ. That's a significant level. 12,207 is the previous year's low. Again, look how close we are. We're 500 points off of the low from a couple of days ago. That's the Monday low. 500 points. I mean, that's one day if it really wanted to, because this market's averaging right now 500 points per day over the last 10 sessions. 475 over the last 5 sessions, including yesterday's compression day. So if it really wanted to, it could get there very quickly. At some point, we still may need to grab that level. So we may not be done with new lows, especially in tech. Those still may come, but that doesn't mean that we can't bounce a little bit in the meantime. And 14K could be that easy target up above, especially if the previous week's high is taken out early tomorrow. Now, worst case scenario early tomorrow, at least from a bearish perspective, would be a trap or rejection of the previous week's high, followed by a deep pullback to the FOMC key level. That could open up a push through that level, and again, that would be tremendous in terms of trapping the bulls here from today. Not expecting that as of right now. Instead, we're looking for the checkmark trend day opportunity for a continuation higher from a short-term perspective, and seeing how high can we go up the ladder. Right now, 13K is that major area of support right here. You have 14K kind of in the middle. You have 15K on this side, and that's your market structure right now. So to hold this edge at the moment, 14K could be a short-term target up above. We're 500 points off of that from today's close, but any pullback tomorrow could add a couple of hundred points for a stretch into 14K. That could be an easy short-term target up above, at least over the next 1 to 5 days. Obviously, the market has the NFP report on Friday. That's going to be big. If the market can, if we can add jobs during that time, it could be nice. And then we have other economic data that could be coming out next week that could be helpful as well if it's in the favor of the bulls. So again, 14K could be a little bit of a bounce to the upside, back toward the middle of the range. But one thing I continue to stress is bear market rallies tend to be very aggressive. Think this rally here, or even this 3-day move, it tends to be very, very bullish, and then it just takes it right away. So we could be on that, short-term push higher toward the upper end of the range, and still see another rotation down toward the previous year's low up ahead. So we may not be done with lows overall for the year, but this could be a decent short-term opportunity to bounce it back up, at least over the next 1 to 2 weeks. Now, looking at, we'll continue to look at some of these other indexes as well, but look at the YM here. Again, this one has been one that has held it together for the most part, comparatively speaking. This is the previous year's low, and these are the yearly PivotBoss pivots. So if you go back to the first monthly outlook of the year, the first thing we mentioned to begin the year was when you close the year near the highs and you have a wide range from that year, the tendency is for a rejection and a return to the midpoint of that year. And that played out in the first 3 weeks of the month. I mean, that's tremendous how weak that was. And then from there, huge bullish rally, and then new lows. And then from there, huge bullish rally, and then back to the lows. So again, those bear market rallies are fierce. Right now, we appear to be in another one of those modes that could be a bear market rally that gets us back up the range, perhaps back toward 35K. But it wouldn't surprise me if it gets hit again for another rotation down. But right now, blue chip stocks hanging in there a little better than tech. But when you take the whole look here from, say, last May to right now, that's 1 year's worth of price action. Look at that tremendous rounded top there. I mean, that's very ominous from a longer term perspective. You look up here, um, there's the weekly time frame. I mean, that is about as big and well defined of a rounded top as you get. The lower area of support has great CLVN right there, and that support level, and that's a strong pivot for a failure. At some point, you know, taking that out opens up a return to the previous year's low. So by no means are these markets done, perhaps discounting. There could be more to go. And so again, during this time, keeping positions light, adding back to positions, or continuing to build positions, or on these bear market rallies, trimming positions that aren't really working well, adding to ones that are, you know, that you know, bit of exercise there will continue to play out. But at some point here, if these major support levels are taken out, you know, this week's strong lows will be a great pivot for a failure down the way. So while we might see a little bit of strength here, you know, these overall patterns right here, very ominous for longer term price action, and we're still not out of the weeds by a long stretch. But that doesn't mean we can't rally in the short term. So good FOMC key levels here today, great reaction. We may see a little bit of short-term strength up ahead, but I would still be a bit guarded overall, as these markets could still continue to find new lows. All right, let's take a look at crude oil real quickly. Now, crude oil has been coiling up tremendously since that massive push up to the 130s. That was a huge move up into that area, then a massive correction back down to about 93. 94, and that's been about the area of support that is held firmly. It's the previous month's low price. This market has been hugging the 105 level. That is a sticky level here, and we've seen a convergence here toward that price as price is trading around the apex of that pattern. At some point here, we may see a move to an edge, and that could provide a nice fade opportunity. Given the the nature of the market that we're in, fading weakness is still best from an energy perspective. If this thing were to drop down here, it could be a great opportunity to fade it back up. Again, not expecting this thing to blow through the 115, 116 zone. That's been a very good market structure edge. So if we come into this zone, there could be a failure back into the range. A 10-point drop from 115 back to 115, or 105 rather. That's a nice sticky level. So if we get to an edge, there could be a fade. But for right now, this thing is chopping up in the middle here at the apex, and typically when that happens, you want to stay away until it hits an edge. And again, if we can get a move up toward 15 or so, that could provide a fade back into the range. If we were to drop out right toward 95, 94, it could be a fade back up. Until then, you got to kind of let it play out. So holding off on kind of these higher time frame moves here until we get to an edge in crude oil. Looking at gold, man, gold has been quite the mover here lately, but it really hasn't wanted to do anything with prices above 2,000. I have made the comparison of current price action to how price responded last time above 2,000. That was the August 2020 move where it rallied tremendously, and then once it got above 2,000, failed spectacularly back below, and then made 2,000 resistance. Same thing happened here. Tremendous rally, spectacular rejection of prices above 2,000 and back down, and we're still kind of in that range right now. So the key levels that we've continued to watch here for gold is 1850 on the downside and 2,000 on the upside. So that reaction right there at 2,000 again gave us the indication that we might return back down toward the bottom of this range, and it got right to 1850. This is a zone that if it can hold 1850 here, we may have a shot back to 1960 and stay in the range. In this zone here, again, this could be a very good market for gold. It's continued to hold these gains, but it's been very, very choppy. 1850 is the key level. If we breach 1850, nice LVN there, it opens up 1760. That's the next level down. So again, any failure here could open up a quick return back down, and that could be a fade back up. But right now, crude oil, or rather gold, not really doing much above 2,000. A tremendous cap at that area and staying in the range. So once it sealed off 2K, 1850 was a strong target to watch. It held. You know, this might be the range for a little while here unless it gives it up, in which case 1760 would be the next downside target. But admittedly, gold has not been very easy to engage this year. It's been very, very volatile, but the edges and the key levels we have on the board have been very, very useful. Let's take a look at the dollar. The dollar's had quite a bit of action. You can see right here the 103.35 is today's FOMC key level. This thing held over the last few days at these highs, and today a perfect stop run day down and pulling back. Now, if we widen this view out on the weekly chart, this chart right here really shows how great the key levels have been. The 88.5 has been a tremendous level. 92 has been a tremendous level. 95, and then when you get up here to 105, and then you get up here to 103, and those 5 numbers have been tremendous for gold. Or rather, the dollar. Anytime you see an edge up here, inevitably it tends to turn right back down. Up here it tends to turn right back down, and over here showing initial signs for turning back down. And that next level down, you know, again, takes you right back toward about 90, 98, 97, or as low as 95s. So this has been tremendous in its strength, but there's something about the 103 level that once price gets into that area, it tends to rotate back down from it. So you know, this is many years in the making as well. This range 1, 2, 3, 4, 5, 6, 7, and developing the 8th year of working off of these levels. And that doesn't guarantee that we'll break back below 103s here in big fashion, but that has been the tendency once it got overextended. So we could be looking at a bit of a snapback here in the dollar. The first downside target from a short-term perspective, I think, is 100.5, and from there, you know, we may bounce around. A failure to hold 100.5 opens up a return back toward 97 and thereabout. So keep an eye on the dollar here, but we may have run our course from 89s all the way back up to 103s, and the tendency usually is to fall back into the range after that happens. So again, this is the highest FOMC key level we've seen in a while, and it's right at that 103 level. We may be looking at a return back down toward 100.5 here fairly soon. So showing a bit of resistance here at the top end of the range is the dollar. Let's take a look at Bitcoin. Bitcoin right now showing a tremendous ability to hold, and this is what I've mentioned throughout the year so far. Obviously, since November, all of crypto has been crushed, right? Significantly crushed. But year to date, comparatively speaking, Bitcoin has held fairly well year to date. So if you just look at the beginning of the year here, and you look at 3,800, 38K rather, 38K is held. This is it right here. That's been the zone. The upper end of the range has been 46K, and that's been about it. You get outside the range and it fails, you get outside the range and it fails. But so far, it has been able to see tremendous defense off the lower edge. Bulls come in and defend, and even if we were to drop here, price doesn't stay below 35K for long. There's only been a couple of points here where we've actually traded prices below there before a massive turnaround has occurred. So 38K has continued to be tremendous support today, stop run day through yesterday's highs. So from a short-term perspective, again, checkmark trend day up perhaps could be in play tomorrow. Any pullback, say, to 39K could open up a return back to the previous month's midpoint. That's about 42,500. So right there, that level is the previous month's midpoint. That looks like a good snapback point for this market. Obviously, we're still in the short-term or medium-term downtrend here. But if it can hold that early pullback to 39K early tomorrow, there might be about a plus, 3 to 4,000 back up toward 42 to 43K, followed by what could be a return back up to the previous year's close. That's been the upper end of the range every time it's rallied. So as high as 46K, if it can hold 39 on an early retest tomorrow and finish bullish, that could provide a little bit of strength. Again, if we come out tomorrow and there is some sort of significant failed high and a hardcore turnaround, if we come out tomorrow looking like this, right? Not just in Bitcoin, but in many of these markets, look out below. There could be an aggressive push to new lows ahead. Again, not expecting that as of right now. Instead, expecting kind of a bit of a bounce. But you always got to be mindful of where that could fail. And any failed new high tomorrow with an aggressive push through the midpoint of today's range could change things. But right now, that 38K has been a tremendous area of support. And we might have as high as 46K coming up ahead. Although, first things first, looking for the previous month's midpoint between 42.5 and 43K. Looking at ETH, you'll see the similar price action. 2,800 here has been significant. The low of the month so far is 27.50 even. And again, another stop run day above 2-day highs. Any pullback early tomorrow, with a pullback saying to 28.50 or so, could open up a return back to the previous month's midpoint, and you're looking at about 3,200 in that case. So, 28.50 to 3,200 could be an easy near-term target, but there could be a little bit more up ahead. It wouldn't surprise me if we started to go beyond 34, 35, even if we see another rotation back off that level. So right now, again, it's kind of like the water moving from one side of the bathtub to the other. It went up in the bathtub, now back. We may rally back up and then still come back down. But right now, the short-term flow could be to the upside based on today's late-day strength. So that right there would be Bitcoin ETH holding at the moment and seeing tremendous support. Tremendous support off that 38K level, off the 2750, 2800 level in ETH. And given where tech has been trading, somewhere down here, it's been relatively more stable and bullish, comparatively speaking, within its range. But continuing to watch these edges. All right, so we've got some of these bigger futures contracts and some of these things looked at. I wanted to talk some stocks and show some opportunities that could be out there now. First, we'll start with some of the bigger stocks that could be leading this thing higher. If we're going to rally, it'd be nice to see tech lead this thing up. So if we look at some of the leaders, for example, let's take a look at Apple. Apple was up 4% today. It's the first one we looked at in the trading room in terms of strength. Microsoft, Apple, things of that nature. And look at today's rally. I mean, significant push to the upside, and again, when you have that leadership stock, it can tend to lift some boats. Now, again, not trying to overshoot this thing and saying we're rallying to new highs, but we're in a trading range. And if we're bouncing off the lower edge, then we have a shot to hit the middle of the range, followed by a shot to rotate back toward the top end of the range. This one's already, for all intents and purposes, hit the middle of the range in 3 short days. Again, the next pullback could continue this thing, and we may be looking at a 176 to 178 move up ahead, even if it's rejected again. We began the year mentioning that any rejection here could bring us back to the previous year's midpoint, and I mentioned that 150 could be the best buy on the board, at least early on, and that level still has not been hit. I mean, the lowest it got was right there, and that was 150.1. So it got right to that 150.1 on the lowest low of the year. That was a squat bar. It was an inverted hammer type of pattern, and then you see this huge turnaround bar the next day, and that led to a tremendous rally. This is a different rejection with a continuation up, but nonetheless seen quite a bit of strength on this lower edge of the range so far. And again, we may see a little bit more strength. So nice to see Apple lead the way higher. You look at things like Microsoft. Microsoft looks fairly decent as well. This is one that's been teetering on the edge. Previous year's midpoint here. Previous year's closing VWAP there. And again, you can see how it's been managing this edge over here, kind of an inverted head and shoulder type of pattern here. And if it can push through the previous week's highs, it opens up a bit of upside to about 315. That right there could be solid from a short-term perspective, right? So, you know, when you dissect these things into market structure ranges, you get 315 on the high. Down here on these lows, you're about 270, and then right here in the middle, you're somewhere about 295. So you trade some in here, then you fail, you trade some in here, then you rally, and you trade some in here, and you fail, and you trade some in here. Now we may see that transitional move that takes us back toward 315. Again, even if it just comes right back down. So we might be on that flow to the upside where we see some strength this month. You get some juices flowing for some folks. But again, at the same time, we may not be out of the weeds, even if that were to happen. But this looks good. Again, you want to see these leadership stocks turn around. You want to see them show some strength. Outside reversals today, if you run the outside reversal scan, you're going to get a ton of these pop up on your scan list. And once you've traded in the lower distribution for X amount of time here, it's probably about time to transition to the next highest market structure if it can get through that LVN. So tomorrow, again, can we make a transition? Can it push through 295s? Push through the previous month's midpoint? If so, you may open up a move all the way back toward 310 to 315. So again, Microsoft, Apple showing some leadership there. Let's take a look at Amazon. Amazon probably looks the best of all of these because it's dropped the lowest, and it has a significant reaction on these lows down here, and that's right off the 2400 level. 2400, quite a move. We're coming up to the 20-for-1 split here coming up, but again, this is not a bad zone to be. You know, this is a decent zone here where we could be looking at least a bounce back toward 2880. That's the previous year's low right there. This bounce is occurring off the 50% extension. That's the 50% yearly extension, and that's basically these buy signals coming off the 50% extension, coming off the previous month's low price, and not quite an outside day today, but still a very good failed new low reaction. I would say This has a good shot to bounce as well and lead a bit higher, and we could be looking at a return back to 28 to 2900 in the near term. And that would be a solid move just from a short-term perspective. Obviously, if you look farther out, Amazon might surprise and return back toward the previous year's close. Again, that might be a bit higher up the ranks here, but that's that could still happen. That's right around the highs of the year. We could get into that zone. Right now, again, we're kind of keeping it close to the vest and looking for returns back to the midpoint of the previous months. Can we get there? You're going to reject the previous year's low or month's low, then you return back to the previous month's midpoint. So 2,900 is about as high as we're looking for here over the next couple of weeks. Can we get there? We will see. And again, these series of rejections here could lead to a decent bounce in the near term. If there's a failure, though, again, if we failed new high, outside day down, then shoot, how much more do we go? You got the 2050 key level down below. That could be in play. But right now, again, decent reaction. Not quite as strong as Apple, not quite as strong as Microsoft, but a decent reaction nonetheless. Let's take a look at NVIDIA. This one was up 3.7% today. And I like this one a ton here for the short term. This looks really good. The reason why I like it, again, you have major market structure support here. You got the top end of market structure, however you want to draw that, and another failed new low outside day, and you have this kind of box that is formed below these lows. And when you have that happen and you can't make new lows, there's a tendency to break back up, hold, and continue back up the range. Again, can we get to the midpoint of last month's range? That's the short-term idea. That's about 230. Right now we're trading 203. Perhaps tomorrow, for example, if tomorrow is a good bullish leg, buy the dip and go, then we could be looking at a push, say, from 200 to 230. That'd be about a plus 30 right there. And it could be done in a matter of a week, right? So we could be looking at a decent push back toward that zone. Now, when you look at the average monthly range from this low, the average monthly range would put you all the way to 247 for the month, based on average 10-week range, or 10-month range rather. But again, not looking to overextend this thing, right? We're just looking for that midpoint, perhaps looking back toward value as it comes down a bit. 230 could be in play here. So if tech is going to rally here, Apple, Microsoft, Amazon, NVIDIA, it could lift some boats over the next 1 to 2 weeks, which could be a very usable move for short-term gains. These lows will be very important. Can we overcome those lows? If so, it holds and goes. So again, this looks decent. Looks decent heading into tomorrow's market. Now let's look at several stocks here. I have a whole list here beyond these that could be good as well. We'll look at Adobe first. Adobe looks solid. The previous year's low is this level right there. And notice how bulls have come in to defend it on multiple rotations. And then it failed. And once it failed, it didn't really keep going lower. Instead, it formed this little box right there. And now today, failed new low, outside day up, and closing back above the previous year's low. 420 is that low right there. To reclaim prices above 420 again could open up a short-term rotation, and we're looking at somewhere around 470 as the upper end of the range. You have value coming in here. That's yearly VWAP. You also have this HVN right there. It's about 465 or so. So again, if we can hold on the morning pullback tomorrow and finish strong, this thing could have about a plus 50. You know, from 420 back to 470, you could be looking at about plus 50 here to the upside in the near term. Even if after that rally it just does that. You know, again, it's that move and then it came down. Then it's that move and then it came back down. And it's that move and then it came back down. That's your market structure, and now you have a failed low. It's that move again. So it doesn't have to take long to get there. It would be surprising if we got there and then exploded through it, but we're not looking for that right now. It's just, let's keep it short term here for the month and see if we can get back to value, get back to the top end of the range. 420 could be that level here, that if it continues to reject prices below it, there could be about a plus 50 to the upside in Adobe. So that's one to watch. Given, then this is something we talked about in the trading room here to finish the day. But again, inflation has been obviously 40+ year highs, continuing to rise for the most part. And when that's the case, there's a tendency for consumers to go to discount or bargain outlets, right? So you have Dollar Trees, you know, you have the Big Lots, things of that nature. This is one of those ones right now that's been trending higher. So when you look at the whole market as a, you know, the context of the whole market, most of it's down here somewhere. This one is up here trending higher, and it's at the S20, or rather the R25 for the year. I mean, it's at 25% expansion from the previous year's range. That's fairly bullish. So we have one that's actually trending higher here for the year. You have this failed new low right now, holding the previous week and the previous month's close. And above these highs, above 167.5 here, opens up at least a retest back toward the high of the year and the high of last month, which is 177.5. So, you know, given the uptrending market, given the fact that we have this rising inflation, consumers looking to get the most value for their buck, and sometimes going to a store like this here helps that. So, failed new low, bullish session here, closing beyond yesterday's midpoint. This could provide a decent opportunity to squeeze back toward about 175 to 177.5, 175 to 180, somewhere in that zone, especially given the overall trend. So this is one to keep an eye on from that perspective. We also have Costco. Costco's been one that has, for the most part, kept it together. You can see right here, the recent pullback, that was sharp. 610 back to about 520. That's a hard pullback. But you can see this is yearly VWAP. And right now, prices below that trapped, and a massive squeeze here today. If prices can hold on the 530, you know, 538 type of pullback, there could be a continuation back to the previous year's close price. So we're looking at between 560 and 570 as an upside target. The midpoint of the previous month is here. That's also the previous year's high, and it's the bottom of this market structure. So again, keeping it more short term right now. Bear market rally can get us right back into this zone, even if, again, it gets sold off. This one's not as strong as some of the other candidates we're looking at, but again, the potential is there. If prices below 540 are defended, we may have about a plus 30 to the upside. This is one right here that, admittedly, a bit different than some of the others we're looking at. This is Lucid. Lucid is sitting on significant support. 1750 has been a significant area of support for this one. That one day we had it as a buy candidate because it was at 1750, and the top end of the range was going to be nearly a double. And it got there and then some. And then it came back, obviously, and then failed back within the market structure. So you can clearly see the market structure here. You can see it when it fails here. and you can see the move back within the market structure. Again, this one does have earnings coming up, and a stock like this, Lucid, an EV stock and an auto group, you know, again, not the easiest. It's rolling your boulder uphill, which can be very difficult, and earnings might crush this entire pattern. But it wouldn't surprise me if there is a reactionary rally off of this 1750. The way it looks right now, you have this narrow range, you have the failed new low, outside day reversal today. So again, perhaps there's an ability to rally back toward value. 2350 would be in play, maybe a little bit higher, but we're again trying not to overshoot where we think this market can go given the overall bearish sentiment. But this is one that, again, 1750 has been a reliable area of support. Doesn't mean it will always be that, but the fact that you know, the market's pointing a little bit higher means we could see a little bit of a relief rally. 2350 would be a retest zone, and as high as 28, although, you know, again, this one has earnings and that may all change very quickly on earnings. But if you want one here, this is going to be after the market tomorrow. Earnings comes out. Again, decent area of support, but with earnings, it's you got to be a little bit careful with a stock like this. JBHT is another one here. This one has developed a very clear range here at these lows and is breaking to the upside at the moment. And that range developed right on the 170 level, which is also the previous year's midpoint, and it's the previous year's closing value with regards to VWAP. That's a pretty solid area to hold. Bulls definitely coming in here and absorbing those prices and defending them. Can we get going to the upside, especially after this tremendous meltdown? Does all this support get released to the upside? If so, I think 185 could be an easy target, and that, again, a short-term opportunity. So any pullback tomorrow, even 175 plus 10 could be a 185 up ahead. So this is a short-term potential based on the breakout from this range, based on its ability to hold value and hold the previous year's midpoint. All of that could open up a little bit of strength to the upside back toward, again, 185, maybe 190, maybe 190 back to value in the top end of the range here. So this is going to be one to watch for a bit of a continuation to the upside if it can stay above 175. 175 is the level to watch there. Another one here is ARC. ARC here, this is the ARC ETF, the Innovation ETF. You know, this one is interesting again because of the outside reversal that developed today. A lot of these did that, obviously. It didn't quite get the previous month's low, but pushing off this zone. You can see this 1, 2, 3, 4, 5 days here, very narrow for the most part. We can quantify that with our PivotBoss advanced ADR indicator here. If I go up here to 5 days and apply it, one, two, three, four, five. Not super compressed. We've seen better compression before, but nonetheless breaking out of that narrow range, and the potential is for about a 10-point move. 10 points. So 10 points from the breakdown point. You know, again, if we use this low here at 47.5 plus 10 points, that puts us at 57.5. And that's right around where the midpoint is for last month's range. So again, try not to overshoot these upside targets based off of the overall weakness we've seen. You can clearly see VWAP has been trending lower in this stock, and value has been offered at every step here. So anytime it tests it, value's being offered. So that's about as high as we go, 65, before perhaps this thing starts to rotate back down again. So based off the 10-point potential, again, that puts us at around 57.5. If we can push a little higher, maybe it goes to 65s, but it may rotate right back down from there. So short term, there could be a little bit of strength here out of this one. And again, looking at the previous month's midpoint as that target. Here's a few more. This is EXPE, Expedia. Expedia's been crushed. This is tremendous. Obviously, we had earnings here that came out. The actual was a loss of 47 cents. The estimate was for a loss of 68, so it lost less than expected, but still a tremendous meltdown. What I like about this one is the fact that it has sold off so sharply from, say, that pivot high right there. Intense sell-off, and then you have this signal here, which is a two-way signal. It's an extreme reversal buy signal. It's also a wick reversal buy signal, and it's happening right on significant support, 140. So when you have that incredible sell-off, there is a tendency to snap back. That snapback, that's exactly what an extreme reversal is a snapback after that extreme move. So you get one move one hard way this way, and then you snap back. Look right here. That's the exact same move. You get that hardcore sell-off, and then you snap back, right? That's what we're looking for here. We have a great rejection here today. A solid failure of the previous low. Extreme reversal. So it closed today with a gain. No, rather it did not close the day with a gain. It closed the day above the open, but not with a gain because it gapped down. But to close the day above the open is not bad. And again, any pullback toward the midpoint tomorrow could provide a checkmark trend day up, and we might be snapping back. If we do snap back, again, not trying to overdo the upside target here. Instead, we're looking perhaps at a snapback that could be about a plus 15, say back to 165. Maybe it gets a little higher to 170 or back to break even on the month. But you don't have to really grab all of that to make money, right? You can snap this thing back to 165 and make a good chunk from where we currently are. So any pullback, 147s could lead to a move of about a plus 15 to 20 on the upside, if this thing can stay above 145s here over the next several days. So this could be a nice snapback here. IBB is another one. This is IBB. This is the biotech ETF. Again, mostly weak for the year, but showing a reaction at the lower edge of the range. So, bringing back this 119 zone or so right there, you can see the lower edge of support. 136 is the upper edge, and that's basically your market structure. You have a middle level about 126, let's call it 127. And that's your zone. You trade some up here, you trade some down here, you trade some up here, and then you wipe it out, but reject those prices. So today and this week, we've seen a rejection of prices below 119s, which means we should make a move back within the market structure, back toward the center of the range, 126, 127. Even if we hang out in here a little bit before making a transition, if at all. So again, another stock that is showing an initial reaction at a market structure edge, which theoretically again brings you back within the range. 127 could be that target. So again, early pullback to about 120 can give you about a 5 to 8 point rally to the upside in IBB. So a couple of ETFs to work with here. Additionally, we have MCK, McKesson. This is a drug stock. Drug stock's been very bullish. This one has earnings after the market tomorrow, but drug stocks have been very strong. I mean, you've seen some of these go much higher based off of COVID vaccine things. This one right now has been in an uptrend throughout the year, so it seems odd to see a stock chart look this way this year, given all of the weakness we've seen across much of the market in tech and crypto, even bonds. But right now we look like we may be headed again another wave higher within this uptrending channel. Again, today was a very bullish day where it had a stop run through 2-day highs. So again, naturally that point right there, about 314, could be an opportunity. As low as 314, 315 could be an opportunity to buy the dip and look for a push back toward highs and perhaps even through those highs. Now again, tomorrow is earnings, so tomorrow might be a day where it just kind of hangs out, and then post earnings you see the move. As of right now, again, some of these drug stocks have been seeing some tremendous earnings during these cycles, and that could be the same here. So again, 315 could open up about a move back toward 335 to 340, and this channel continues to live on. So very strong is MCK. This is MicroStrategy, MSTR. This is a good one right here based off of its range as well. This one tied to Bitcoin in many ways, and Bitcoin up today, what was it, 6%, and could make a move back toward 42 to 43 we mentioned, with a shot at overshooting to 46. And if that happens, then this boat lifts as well. You have a tremendous reaction of prices below 340 here, and all year long prices below 340 have been defended. Today was a strong day, failed new low. Not quite an outside reversal, it's stuck right there near the highs of the week. But this one could be a decent one here where, again, not to overshoot the upside target, take it half at a time. This midpoint right here, that's the previous month's midpoint. That's value for the year. Those are your major targets. It's 420 to 430. So right now, this thing's trading 366. What if there's a 360 pullback tomorrow, and then 360 takes you to 430? Right? That's a solid move right there. So 430 is last month's midpoint. That looks like a really solid target from a short-term perspective to get back to not only the previous month's midpoint, but also VWAP for the year. VWAP is flat. So when you look at VWAP right here, you see how flat it is. Whenever you have a flat VWAP, that suggests value is steady. You have a trading range market, and the best course of action is usually to fade the edges of that market back to value, as it did there and as it may do here. So usually you're fading the edges back to that value. So somewhere between 420 and 430 could be the next upside target for MSTR. And again, keep an eye on Bitcoin, because if Bitcoin does make that move to 42, 43, this one will follow. If Bitcoin makes that move to 45, 46, this one may follow. And again, even if we do that, it could still turn right back down overall. So this move right now, taking it short term, taking it a day at a time, a week at a time, and then looking for high probability targets on the upside. So MSTR, not bad. Another one here is PayPal. I know PayPal's gotten its butt kicked. It has not looked good at all. There's been a couple spots here where I thought it might see a bounce, and it just hasn't done it. And it just continues to get punished. When you look at last year's range goes from here to there. And then this is your 25% extension Man, gap through that. Here's your 50% extension, failed at that. This is your 75%. So we're at the S75 on the yearly. Yeah, that's really bad, you know, to be down that low. And to get down to the 100 S100 target would put you basically at 5-year lows. I mean, and to do so, you'd cut price in half again. That could certainly happen. But this might be a good spot for PayPal because we finally reached value. After all of this weakness we've seen since last fall, there's VPOC. And it hit it, it traded it a few days, and now it's currently above it. Perhaps this is a short-term opportunity here where this thing could make a move back up the range. So if you kind of zoom in here, again, decent reaction here. Outside day, you have you know, this narrow range that's developed. You know, if it can negotiate prices above 92s, 92 here is that market structure edge. This looks the part for a squeeze back toward 102. That's a plus 10. You know, tomorrow could be a pullback to 90. 90 for a 102 could be in play. Beyond that, you know, maybe there's a shot to come back up to value at 120. But again, we're looking for short-term ideas here in the face of a bearish market. This one's not bad, and the fact that it kind of finally got back toward VPOC suggests that we could be looking at a bit of a bounce back up, at least in the near term. So if this thing can stay above 90 early tomorrow, there's a shot at about a plus 10 to 12. Maybe a little bit more beyond that, back as high as 120. And again, downward trending VWAP, that could be an opportunity to sell as well. So right now, this doesn't look bad. If tomorrow comes out and fails hard, all of these candidates we're looking at will fail. You know, they're all have the very similar market structure. They all have very similar outside day reversals. If we say failed new high and a push through today's midpoint tomorrow, again, things could get ugly very fast. So, you know, keep an eye on these midpoints early tomorrow. 90 bucks here. If this thing can hold, there could be a nice push higher over the next 1 to 5 days, maybe the next 1 to 2 weeks, as this thing kind of gets a little bit of a relief rally after these new lows. And that's one thing I continue to stress, is that the one thing that gets this market to go up right now are fresh lows. You get fresh lows, that's an opportunity for the market to, you know, market participants to add back to positions or buy in on positions and allow this thing to bounce back. So again, there's a decent shot here for at least a near-term bounce of about 10 to 12. And maybe as high as a 20-point rally. Another one here to keep an eye on is Square. Square's been sold off tremendously from last year's highs. You know, last year's highs are 290, and we're trading, you know, 106. So that's a major haircut. But if we just ignore last year and just look at this year, it's been fairly range bound. You know, obviously it's weak. This is the previous year's close. But 95 has been an area of support that market participants have defended. We've seen it again today as price dropped into 95s and then shot back up. Not quite an outside day, but still a very good failed new low buy signal off the previous month's low. Another thing you'll notice is at this support are these blue candles. These blue candles are squat bars, where you see increased volume on those days compared to the previous session, but also lower market facilitation. And you see a series of these here, here, here. These are all blue. So that tells you right there there's quite a bit of volume coming in to defend this zone, just as you saw here or here. And that could tend to lead to a bit of a bounce here. So For this one, 95, strong reaction all year long off that level. Today, more of the same off that level. Can we get a move that gets us back to 120? 120 could be a good target up above. That's the previous month's midpoint. You have a flat VWAP for the year. Again, when you have flat VWAP, you tend to fade the edges back to value. Fade the edges back to value, right? That blue dot right there is value. That's about 118 right now. 121 is the midpoint. That's a really strong target right here. So tomorrow, can it hold the early pullback? 103s. 103 could open up about a 121 move. That's about a 15 to 20 point rally back toward that value target there on a short-term basis. Not a bad stock there. So again, quite a bit of strength on some of these stocks. Ideally, if this market's going to go higher, you got to see tech get off the sidelines and start to move. And I think we saw that today with Apple leading at 4%, Microsoft up nearly 3%. You're seeing NVDA up nearly 4%. I mean, that's a lot of strength right there. Can we see some follow through now over the short term? This is a good area. It wouldn't surprise me if we rally all the way back to 150. Again, even if we kind of rotate back off that level once we get there. So good support here. But man, if we fail tomorrow through this support, I mean, you have to watch out below in a lot of these markets. We're teetering on support. The ES is teetering on support. The NQ, YM, BTC, ETH, they're all sitting on significant support right now. And ideally, you see a quick reaction back up. Because if there's a failure and these bulls are trapped, it could get really, really ugly really fast. We still have value down below at 60, 61 here for this one. So, I mean, again, something right there to continue to watch. Now, there's a couple of stocks here that some of you asked me to look at. One of them was Coinbase here. Coinbase dropping tremendously. This one, I was looking at this one a little bit earlier, and wow, the fall from grace has been tremendous. You can see that prior support eventually gave way and became resistance, and the last pullback, that last pullback right there, you saw a breakthrough last month's midpoint, and look at the collapse. Tremendous weakness all the way back down. This one's still tough in terms of the potential upside. When stocks get into this rolling, downtrending type of market structure, especially if it's something that is a disruptor, it can continue to get crushed like this. This one still has some of the characteristics that we're seeing in the broader market, so perhaps there's a little bit of a bounce. But 150 might be as high as this thing goes before we see another rotation back down. So short term, maybe there's a bounce behind the broader market strength that could occur. But when you look at things like this one, these market disruptors, the Robin Hoods of the world, those types of things, I mean, Hood's even worse. Again, it's hard to see these getting off the mat because they just continue to get punished. So, this is another one of those that could bounce in the short term but continue to get rocked. I think Coin right now, here it is right here. Coin could be due for a little bit of a bounce back up, but 150 would be probably as high as this thing goes before maybe seeing another round of weakness. Also, this one has earnings coming up, and that could be, again, something where this thing gets thrown for a loop. So be careful on this one a little bit here. A short-term rally toward 150 could be in play, but these types of stocks continue to get punished until proven otherwise. Another one was SEAS. This is SeaWorld, 67 bucks right now. This one has actually done okay. This one's done okay. For the most part, it's been treading water here at these highs. We haven't seen, a meltdown of prices. It hasn't even, here's the midpoint of last year. Here's the pivot point for the year. Not even sniffing those levels. Actually trading above the previous year's high as recently as last week. Today's rejection tail is decent. You have earnings coming up here tomorrow after the market, it looks like. Is it after the market? Oh, it's before the market. So tomorrow before the market. So right out of the gate tomorrow, this one might be due for some early volatility and movement. This one's harder to make any kind of real good judgment about because we're sitting right at value. So that's VWAP. It's sitting at value. It's sitting at last year's break-even price, and it's right in the range. So harder to make an assessment on how we might move out of this one, but the 200-day continues to trend up. It's seen less weakness comparatively speaking to the broader market, and we have this upward sloping channel that could release the next move to the upside between 76 and 78. Again, earnings, depending on what happens there, could completely shift that right out of the gate tomorrow morning. But based on what we're looking at, the likelihood of rallying back towards 76 to 78 seems in play. This one is one that on big weakness has tended to snap back, as it did here, as it did here, as it did here. That's 3 good times already this year, and we've seen another pullback. It wouldn't surprise me if we get a bit of a bump to the upside here ahead. Although, with earnings, you just never know. So, tomorrow, again, a little harder since we're right at value. But based on the structure of the market here, it appears as though another round higher within the channel could be in play. The other one was U.US. Can I plot that? No? Was that the dollar? Or I'm not sure if that one, which one that might have been. Caterpillar is one right here that was asked about as well. We had Caterpillar as a buy candidate last week, and the very next day just couldn't hang on. Again, it was one of those extreme reversal types here. It just couldn't hang on there, got a little bit lower, and then eventually rallied. Today, this one again has been moving pretty well in terms of getting from point A to point B. It gets overextended, it snaps back, it gets overextended here, snaps back, up here, snapping. But it's really been hugging the previous year's close. That's been about it. It's really hasn't gone too far away from that level before snapping back. You go up, you snap back. You go down, you snap back. You go up, you snap back. Right now it appears we're on the rally portion of this leg. That's a strong move. 220 is the previous month's midpoint, so staying above that level could open up a bit more strength. But we had this one as a buy for a rotation back to 220 and perhaps a bit higher. We're seeing that come to play at the moment. It looks okay. A little messy over the last week, but a good move through the previous month's midpoint, which should push this thing a little bit higher. Not a whole lot more. Not a whole lot more beyond that at the moment. This one's not as easy compared to some of the others we're looking at, but still showing a bit of strength. Unity is another one here. Thank you for that one. Yeah, Unity here. This one pushing back below the previous year's low. So you got the initial reaction back to about 110. We knew that there could be a little bit of a trap here and a rotation back to the mid, and then it failed at the mid and rotated back down. So, you know, again, this is kind of par for the course for the market that we're currently in. But one of the things that I continue to mention is that new lows are what tend to get these things bouncing right now, because new lows offer an opportunity for market participants to add back, and these are fresh lows. I mean, you don't get much lower than that. This is the all-time low. It has a failed new low with a nice reaction off the previous month's low and close. And again, one thing I continue to stress is when you close near a low and the previous range is wide, there tends to be a reaction that takes you back toward the middle. So the midpoint of last month's range in a lot of these stocks still looks to be in play. And it looks like it might be way up there, but again, these have been very good about seeing bounces from fresh lows. Earnings, again, could throw a wrench into things. But from a failed new low here, this is a good spot to look for an ability to push back above these 76s. And in doing so, we could rally back toward the previous month's midpoint. And that's going to be, what is that, 87s? Yeah, 87s here could be in play up ahead. Now, clearly, very bearish PIMA trigger zone here. And so you're always kind of fighting uphill when you have a bearish trigger zone. And what tends to break that is a strong reaction at an edge. You know, like you had a bearish trigger zone here, but a good strong reaction pushed you through it. So we may be able to see a move back toward 87s here on this one, and a decent reaction at that level right now. Another one along those lines is Blink. Right here. Blink charging sitting on support. Another one here that had a tremendous trap and reversal. We talked about this one last month and mentioned how this right here, again, as soon as you see a massive rally like that in a bearish market, there's a great opportunity to see a trap in reverse. And that's exactly what happened. Just tremendous weakness since that time. A drop of about 10 points from there. And now we're at the opposite end of the range. This area of support, that $20 level, has been tremendous. You've seen the initial hold and bounce. You've seen multiple reactions here since. And right now it's got this narrow range that has developed over the last 5 days at these lows. That narrow range is quantified down here with the potential to see about 4 points of movement soon. And 4 points on a $20 stock, I mean, that's a good percentage gain. You know, you're looking at about 20% potential there. And if you're looking at about 4 points, and we're at 20, 4 points takes you to 24, and 24 is the previous month's midpoint. And that's been our target zone for many of these stocks here for the next 1 to 2 weeks. You also have VWAP right here as well from a year-to-date perspective. And we have a trading range market. So not as strong as some of these other ones we're looking at. Earnings coming up again. And again, for this type of stock, EV charging stations, it's still rolling your boulder uphill. So earnings not going to be very helpful in many cases on a stock like this. So again, this is one to keep an eye on at support. We may see that bounce come back toward 24s. But again, you know, even if we do make that move back up to the break even on the year, it wouldn't surprise me if it kind of drops back within the range. Trading range bound with a shot to bounce here. All right. That pretty much does it here for today. I mean, we've gone about an hour and 25 minutes looking at a tremendous amount of charts here. I'm trying not to be overly bullish, but today's reaction, the fact that the market is excited that, you know, it's not going to be seeing a 75 basis point rate hike anytime soon. I mean, that type of thing, you know, got the market started just a little bit, and that could provide a decent short-term opportunity here for a lot of these stocks, and that could be very, very good. Again, when you're looking at some of these that might get some piggyback strength off of Bitcoin, for example, MicroStrategy could be a very good one. You had some of these others we looked at, like NVDA or Adobe. You know, a lot of these ones that are at these lows and showing reaction, it could be a decent little move here over the next 1 to 2 weeks. And we know bear market rallies can be very, very bullish, so it wouldn't surprise me if we did go up the range again. But if so, it's an opportunity to take some profits. It's an opportunity to probably trim some of those positions that you're not very happy with and add back to others that you are. So good edge right now. Again, the worst thing we can see heading into tomorrow is some sort of fantastical reaction or failure of prices above the previous session's high, and a massive failure through today's midpoint. That would be very, very bearish. Not expecting that right now, but again, anything can happen. So I'm going to go ahead and call it a day there on the mic here. Again, thank you very much for joining me for our monthly market outlook for May 2022. Again, always my pleasure to be with you all. Thank you very much for joining me. We'll be back at it in the trading room again tomorrow morning. Have a fantastic rest of your night, and I will see you all soon. Take care, folks, and have a great night.